Hello, welcome everyone uh, to this good evening. And today I will be breaking down this selling trade from EURUSD. So this is the trade from this 1.16568 till 1.16255. So this is the trade that I took. So what was the thought process behind this trade and what was the analysis? Let's look at this. So first of all, I will go over to the daily time frame and I will want you to look at uh, these certain lines that I have marked across the chart. So this is one of the practice that I have started from month 5 of ICT's core content, and that is about the IPDA data ranges. So let's look at these ranges that I have marked here. So this is just a simple exercise which lets you go through the structure and key liquidity points and key point of interest that are order blocks and fill gaps in time so that you can uh, select better key levels. So the first step always is whenever you are, whichever month you are in. For example, we are in month of June. So this is first June, and I would want to mark out the starting of the previous month. Like if I am in June, I would mark out the starting of the previous month, that is May. If I was in month of May, I would mark out the starting of April, that would be around here. This is the first April. So I would mark this. So since we are in June, I have marked out the starting of month of May. The next step you have to do is mark out 20 candles from the month of May towards the left side. This is the look back. These three green lines are indicating look back. So from the start of May, you have to look back 20 candles, and then you have to look at 40 candles, and then you look back 60 candles. And you have to observe the price in these three intervals. So what do we see when we look at these three intervals? Let's first look at the 60 daily candles interval. So this IPDA data ranges, you have to analyze these on daily time frame, and there is no other time frame that you have to analyze this on. So these IPDA data ranges just allow you to have a longer term bias of a pair, and with confluences from SMT, it gives you a confirmation of market moving in the direction you have anticipated. So I'm not looking at the structure from this whole leg. I am just looking at the structure that is 20 days interval back, 40 days interval back, and 60 days interval back from the start of May, since we are in the month of June. So if we look at 60 days back, we had a big structure shift that is here. This is a structure shift after we swept these old highs here. And then if we look at the point of interest that are fairly gap or order blocks, we can see there is an order block here, which is also an old high. we have a fair value gap and volume balance here. So these are important points in price whenever price will return back to them. So this is what we see here. Price returned back to this old high, created an SMT with DXY with this high, and it started moving down. So if we look back 40 days from the start of May, what we observe is that in these 40 days there was a range created, this high and then this low and then this low also, these multiple bottoms here, which are, these are double bottoms, and also this low and this low is a relatively equal double bottom. So you have to look back 20, 40 and 60 candles of interval, and then you have to mark out on the left side of the chart all the liquidity levels and the point of interest. So this is the first step you have to do. Spare me a minute, guys. I have to just connect my charger because I am using my laptop since I don't have any professional setup. So these are small fatigues during the live stream, which I want you to ignore. Okay, so from this start of May, we had, if you look at 40 days of interval back, we see that we have these lows created and there is an order block, and there are discounted period gaps that are uh, remaining that needed to be filled. So if we look 20 days back, we have this low created and then we have this high created, and similarly we have an SMT created with this high which was created 20 days back from the start of May. So this is how you have a narrative for the longer term trend, but you also have to cast forward 60 days, 40 days and 20 days of interval from the start of May, which will give you always your continuations, or you can say entry points. You have to look for entries after you have you know you have looked back these specific intervals, so you have to cast forward 20, 40 and 60 days and look for entry areas. So this is not important that these 20 days, 40 days or 60 days will create the specific swing high or low. These are just intervals of price in which we look for entry. So if we look 20 days ahead from the start of May, we see that price moved up. It created an SMT with this liquidity high. Why is this a liquidity area? Because I told you that this is a look back of 20 days and we have this high created. So we created an SMT with this high and then we moved forward with volume and broke down this low, creating a weekly order block, daily order block, and this daily IRL, which is daily fair value gap. So if you observe these 20 days, we shifted the structure of market and then we are again back to the IRL. This is a coincidence that this swing high here, this swing point here is created exactly on the 20th day. It is not necessary that it will be created every time, but it can happen. So this did happen. So now moving on to the intraday bias, as we have discussed our long-term bias. Now let's look at the intraday bias. Since we know these are the protected highs, these are the short-term swings that market have created. So we can expect price to move from this fair value gap, this weekly order block, and then this daily order block. What happens now? is we had these buys on 13th day from the S&P created here, which was very obvious because at that time uh, this was the sentiment of the market, but at now here the sentiment of market was bearish. Why? Because it tapped into the fair value gap, sweeping out all these short-term highs and closing with a rejection candle, which is a candle closure. So the next day on Monday, we should expect price to give us selling continuation. So if you remember from my previous video, this is also a consolidation here. This whole is a consolidation. And what I told you that whenever price taps into a higher time frame key level, it should move towards the medium time frame key level at least. So price is here. It wants to move back down to a medium time frame key level, which was this fair value gap. Now ignore this daily 13th here, since we are not aligning here on the uh, daily time frame with the reversal number. Ideally, we expect 13 to be on this swing high, but if you observe the price, we have 13th here. This is 14th, which is the reverse candle. So 15 is also an important number, which in this case is the C3 candle. So we can expect continuations from price. So now if we look at price approaching this day from the 4-hour perspective, we observe that price was creating higher highs, but the week opened with a gap here. This is one of the indications that there is a resistance created here when this gap was created. So we know that when price is failing to move up to create new highs, then we have buy side taken, and now we are ready to take out the sell side. So confirming this on the time dilation theory, we have 1, 3, 7, 9, and then 13th candle here, which is also the condensation. This was the 13th candle. So if we observe any resistance from this opening gap, then this means that this 13th candle will be our continuation of sells towards the downside. Now if we go to the 1-hour time frame and observe price approaching this 13th 4-hour candle, which starts from 1 a.m. here, and look at price, we see that price created this low on 10th candle. This was the 10th candle. Then it created an inside bar, and the next candle could not break above or below the inside bar. So these two candles are considered as consolidation, which I have marked in gray. This is a range. So this is 10, this will also be 10, this will also be 10, and this is 11th. So 11th, 12th, and 13th. So again, if you remember from my previous video, when we have consolidation and we are tapping into a higher time frame key level, in this case it would be 1 hour order block, since 1 hour after moving into the 1-day IRL has shifted its structure to bearish, and we have 1 hour CSD also here. So what we expect is price, when it will move to the daily order block, it should go down towards the original consolidation and also towards the 4-hour key level. Since we are moving from a daily key level to a 4-hour key level, we can expect price to move from 1 hour key level to at least the 15-minute key level also. Also, our times align here on 13th candle here. 1 hour and 4 hour 13th is this 2 a.m. candle. Now, if you go to the 15-minute and look at price here, this is the 2 a.m. candle on 1 hour, which started from this specific candle. So we have to look at price approaching this candle from this swing low. So if you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and 13. This was the impulsive move up, 13th candle of 15 minute, 13th candle of 1 hour, and 13th candle of 4 hour. These three time frames converge here. So any structure shifts here would be valid, and any retracements up will be just manipulation to engineer more liquidity at the lows. So now when we go to the 5 minute time frame, what I did, I took the entry looking at the 15 minute. This was the 13th candle, then this was 14th, 15th, 16th, and 17th candle here. This was the 17th candle. So I went over to the 5 minute time frame to look for a break of structure. So on the 17th candle, I didn't have any break of structure. So it is not uh, important that we have a break structure here, or you can say it is not really important that 5 minute aligns here as long as this high is intact, because we know that this is aligned in time and it was also sweeping out some previous old highs. So when we have this high created, I counted from this 5 minute candle, and then this was the 13th candle. Why didn't I take the entry of 13th candle? Because it was tapping into a fair value gap, so I wanted price to move up. When it moved up, swept out these tops here, double tops, relative double tops on 16th candle and closed bearish. So I took the entry here, putting my stop loss above this opening gap. But price decided to consolidate and then sweep out these high again and then break down with a clean fair value gap, and then it tapped into the opening gap and also the fresh 5 minute fair value gap and started moving down towards the done. So this was the breakdown of today's entry. Some of the psychological factors that I did encounter was that fear has been taking over me like for ages. It is very important to accept the risk. Without accepting the risk, you can never be profitable. So, since this is my public journal and I am sharing everything that I have done, so I executed the trade exactly. I executed on the uh, paper trade here. My live trade was also here, but I closed the trade on these two doji candles because these specific 15 minutes of time made me close my trade when I had already planned everything. So this is the fear factor, mainly the fear factor, which is very shameful since uh, But we should learn to accept the risk. Simply, I would say that I should accept the risk. I should learn to accept the risk. And even when the price started moving in my direction, what I wanted, then a re-entry was possible, but I did not take it. When I even when I was looking at it here, I did not take this one. And the paper trading, where there is no fear of losing money. There, I did not even touch its stop loss. I did not even look at this trade, and it ended up, taking out this low which I was expecting to go. So here it is, guys. This was a public journal entry, 1st June. Not really a good management. Need to work on my fear and need to accept the risk. And this is the first entry of month of June, which is 1st June 2026. I have repeated this multiple times awkwardly, but yeah. So I'm really sad at this. Why did I close this trade? But it happens. It happens. I will work on it. That is why I've created this public journal, so that everyone can know the struggles of being a consistent trader when uh, when you know the direction, when you know the targets, when you know how to take the entry, where to put your stop loss. But even a small mistake can, you know take away that money which you was about to make. So for tomorrow, I will be looking at the uh, next day. What we can expect from the next day. Let's see. I would still expect price to continue down since we have a good closure and then we have a good volume here. So I would expect price to clear its upper wick and below the 50%. So yeah, I would expect price to clear its upper wick below the 50% and move towards these lows here. I know this is an SMT, but I'm still considering it to be taken out since I have already told you that if you zoom out price and look at the intervals of price, then you will understand that price can go towards these lows. Even if it pulls back up and into the weekly order blocks and daily order block, I would not take that as a long-term buy trend. I would still look for uh, short confirmations around these areas, and I would wait for this structural line. For tomorrow, the intraday buys would remain bearish, and we already have structure shifting here and here also. So if we cast forward from here, when we have 1, 2, 3, 4, 5, 6, and 7 is the New York PM session, which can continue downwards. Uh, there is low probability it can continue downwards since session is over. Also, the forex pairs, they usually don't move after 11 a.m. New York time, but there is a possibility it can move in the next 4-hour candle, since this is 3 and then this is 6 and then this will be 7. But I would still not look for a trade now. I would look for a trade tomorrow, which will probably be, this is 7th, so 9th is the tomorrow Asian session. So if Asian is swept out by 11th candle, which will be the 5 a.m. New York lunchtime. So if we get a 4-hour bearish fair value gap here, this will be a breaker, and then we can sell off from that breaker again towards the sell side liquidity here. So this is the analysis. Let's look what market will do tomorrow, and I will share with you any updates regarding the trade I take or anything I observe. Today was a very big psychological lesson for me. I would try to remember that and implement in my trading. Hopefully, you guys learned something. So I will meet you tomorrow, inshallah.